consolidated statement of consolidated income statement, consolidated statement of P&L and other comprehensive income. Other comprehensive income. I'm purposely doing this with you so that we can relate to the things well. Even your mind opens up. What can go wrong? Now the words will be very clear, because this is the mistake which people do while dealing with deferred taxes. This area is a little bit confusing. So we need to be bifurcating it into two parts. One, adjustment for balance sheet will keep it simple. They will directly apply the deferred tax percentage on the amounts in the balance sheet like we did it here. We'll keep it simple. We'll directly apply the percentages here and we'll commit no mistake. 7,000 and 6,800, they are perfectly done. As far as income statement is concerned, we need to be careful of how much will be the deferred tax adjustment for the current year. That is the amount I was actually looking for, that how much will be the deferred tax adjustment in the current year. So if you look at revenue, there's one adjustment left to be done, intra-group trading. We'll do it now as we move on when we add up the revenue. So what is our job? Our job is simply to add up revenue of alpha with beta, and there is one adjustment to be done. Revenue alpha plus beta, it is 400,000 plus 280,000, 400,000 plus 280,000. If you remember, there was an adjustment to be done in revenue. And what was that adjustment? There was an adjustment to be done. $4,500 reversal of revenue. So we'll make this adjustment 4,500 here. 400,000 plus 280,000 minus 4,500. There's one more adjustment required in intra-group trading. Alpha provides beta with a product which beta uses as raw material in its production process. Sales of the product by alpha to beta for 3 years ended 31st March 2007, total 30 million. Alpha supplies this product to beta at a markup of 20% on its production. So one is intra-group transaction, 30 million. How much to be removed from revenue? How much to be removed from revenue? How much amount we need to remove from revenue? Full 30,000, or we'll apply a percentage on it? Intra-group transaction of 30,000. It is revenue of one entity and cost of sales of another entity. It's part of purchases of another entity. It is part of revenue of one entity. So we'll remove it from both revenue and cost of sales. Shall I remove 30,000? Minus 30,000. The total amount of revenue turns out to be 400,000 plus 280,000 minus 4,500 plus 30,000. 705. 500 is the amount of revenue. What other adjustment we need to make? In cost of sales, you can have a separate note for cost of sales, so you can include all the workings here. Let's have a separate note for cost of sales. Working note number 5 is still pending. This is actually, according to my workings, it was actually group retained earnings, and since it is group retained earnings, takes care of the share of profit. So we'll include cost of sales adjustments here. Cost of sales, alpha plus beta, this is free marks. It is given to us as 240 plus 170. 240,000 plus 170,000. We need to charge depreciation for plant, amortization for brand. Hope you remember how much it was. For plant 5,000, for brand 3,000, We'll add it to the cost of sales. If you remember, in the development costs, we decided that we'll be adding amortization or intangible asset as part of cost of sales. 180. Amortization of development asset. 180, which is the note number. Note number 7. Impairment loss of goodwill. Note number 3. To be included as part of cost of sales. 6,900. Now we are left with only intra-group trading to be dealt with. On 31st March 2007, the inventories of Beta included 6 million in respect of raw materials supplied by Alpha. On 31st March 2006, the equivalent figure in the inventories of Beta was 4.8 million. Can you tell me how much is the unrealized profit? 6 million on 31st March, and it was supplying it at a markup of 20% of cost. If markup of 20% of cost, let cost be 100, selling price 120. So out of this 6 million, how much is the unrealized profit? 6,000 divided by 120 into 20. 1,000 is the unrealized profit in case of 6 million. And how much is unrealized profit in this 4.8 million, which was the opening balance? Unrealized profit in closing inventory. There's an unrealized profit in opening inventory. What do we do with unrealized profit in closing inventory? We add it as part of cost of sales. But if there is an opposite of it, if there is an unrealized profit in opening inventory, we remove it as part of cost of sales because that belonged to the previous period. Unrealized profit in closing inventory is 6,000 divided by 120 into 20. 6,000 divided by 120 into 20. We add it as part of cost of sales. 4,800 divided by 120 into 20. This is the unrealized profit belonging to the previous period. It should not be forming part of cost of sales of this year, which turns out to be minus 4,800 divided by 120 into 120. It also says that any adjustment for unrealized profits are temporary differences which attract a deferred tax at a rate of 20%. There's a deferred tax adjustment as well, which will be making as part of the income statement. How much is deferred tax adjustment for these two figures? 1,800. If cost of sales increases, your profits reduce. If profits reduce, you believe that you are going to pay less tax. What is the impact of it? And if you believe that you're going to pay less tax, you reduce your income tax expenditure, income tax expense for the current year. How much income tax expense you reduce for the current year? The net impact is 200. If the rate of tax is 20%, working note number 11. income tax expense. What is the balance of income tax expense? It is 25,000 plus 12,000. Alpha plus beta. 25,000 plus 12,000 is equal to unrealized profit deferred tax adjustment. 20% of 1,000 minus 800, because net impact is 200. Will reduce it. This reduces our income tax expense or this increases our income tax expense? Please think through it. If you remember, I used to tell income taxes, as I said, that will always remain in the shoes of the accountant, will not get bothered with what the tax authorities are demanding or what they're not demanding. We'll continue to account for our income tax expense according to our accounting principles, which believes that if according to us that expense needs to be reduced, or if according to us that expense needs to be included as part of our calculations, and whatever profit we calculate income tax expense on the profits calculated according to accounting principles. If there is any difference, that becomes deferred tax asset or liability to be shown as part of the balance sheet. In the income statement, we maintain our deferred tax expense. We bifurcate it into two parts, that is current tax expense and deferred tax expense. Current tax is the amount to be paid to tax authorities immediately, but deferred tax is an amount which will be, if we are liable to pay, will be paying in future. If we are not liable to pay immediately, we include it as part of our deferred tax calculations. Now, if we believe that our expense is increasing by 1,000, our expense is increasing by 1,000, this reduces our profit, but there is a entry in the opening balance for unrealized profit as well as 800. So total expense for the year has increased by 200. If total expense for the year has increased by 200, our profits are less by 200. If our profits are less by 200, we believe that we are not going to pay tax on this. We believe that we are not going to pay tax on this. So according to us, our income tax expense reduces by how much amount? We believe that our income is less by 200. If we believe that our income is less by 200, we'll pay less tax on this. According to our income tax expense, the calculation will be less tax. How much less tax? Please guide. And even on our depreciation for plant and brand, we believe that there is an additional depreciation charge of 8,000 in the books. If we believe that there is an additional depreciation charge of 8,000 in our books, our profits will be lesser by 8,000. If our profits are less by 8,000, we believe that our income tax expense will be less by how much? In this depreciation for plant and brand, we have included 8,000 as our depreciation and amortization as an expense. Tax authorities do not allow it because there is a temporary difference. We will stick to our accounting principles. According to us, there is a expense of 8,000. We will account for a tax expense by deducting this 8,000. So according to us, what should be the tax expense? Tax expense is an accounting principle. Any adjustments are to be done with the deferred tax. That will show either as asset or liability. That is a separate thing. But what is the tax expense we'll be including as part of the income statement? We bifurcate it into two parts, what we are going to pay and what is the deferred tax. That is a second appropriation. So what do you think? The tax expense so calculated, there is no adjustment of these expenses because these are not included as part, they are not reflected as part of the financial statements. This depreciation and amortization is not reflected as part of the financial statements. If we include them as an expense, our profits reduce. If our profits reduce, our tax liability also reduce as per our calculations, our tax expense calculations. Our tax liability will reduce by how much? So one, our tax expense will reduce because of this depreciation and amortization. Second, our tax expense will reduce because of unrealized profit of 1,800. Minus 20% of 200. Our tax expense, which we have included as part of the income statement, will reduce by 40. For plant, it will reduce by 20% of 5,000 minus 1,000. For brand, 20% of 3,000 minus 600. Total to be included as part of the income statement this year is equal to this is the amount to be included as part of the income statement tax expense this year. Hope this is clear to you, whatever I've been trying to convey through this. Sapna, Hema, Virpal, Prachi. Hope this component is clear, that if I'm saying that my expense is higher than as recorded by tax authorities, I'll stick to accounting principles, I'll maintain accounting principles, and I'll record an expense of 35360. This is further divided into how much is deferred tax and how much is current tax. That is a further calculation. We are not required to do this as part of this question. That further division is not given. So we'll stick to the line items given in the question.
Amit, is it right to say that they all are deferred liabilities? That is why
Yes.
we are subtracting them.
They are
Deferred tax liability, that is why we are subtracting them.
yes, in case of profits, they are deferred tax liabilities. And see, there's a difference. Tax expense, this is an amount which is a combination of current tax plus deferred tax. This adjustment which I'm making is directly in the tax expense. We are reducing directly tax expense. That means we are reducing a combination of current tax and deferred tax. Now, current tax is the amount which is payable to tax authority as per their calculation. As per their calculation. Deferred tax is the amount which we include as per our calculations, that we say that we know as far as direct carrying amount were concerned. When we were comparing the carrying amount, if you noticed, after this depreciation was charged, our deferred tax liability which we created initially, so there is a reversal of deferred tax liability, if you noticed here, from 7,000 to 6,800. This is taking into account this combination of 10,000 reducing to after charging depreciation. So there is a reversal. Did you notice? We first created a deferred tax liability on first time. For the first time when we were acquiring this, there was a fair value. So we created a deferred tax liability because we believed that this is the amount we will be liable to pay in future. But when the year passed by, definitely we will be liable to pay, because when 1 year passed by, we earned more because of using this asset. And when we earned more, we were liable to pay during the period. So we had created this initially as a deferred tax liability, but when we already have a balance of deferred tax liability, on reversal, the deferred tax liability balance reduces. Getting my point? So in substance, this may seem a deferred tax asset. In substance, this is looking like a deferred tax asset because we are saying that we are not liable to pay higher tax, but tax authorities are demanding that higher tax. Why they are demanding that higher tax? Because we already knew earlier that we'll be liable to pay this higher tax in future. So we are already prepared for it. We are already ready for it by creating a deferred tax liability on the date of acquisition. We knew that we are bound to pay in future, so we are ready for it. Getting the point? So when we say during the year, when we added this depreciation and amortization as part of cost of sales, the tax authorities were not expecting this to be added as part of cost of sales. We reduced our profits, but tax authorities did not reduce our profits and they charged it on the higher amount. When they charge it on the higher amount, we'll pay them on the basis of current tax. We'll pay them on the basis of current tax higher amount. That current tax according to them is 37,000 higher amount, but will reduce deferred tax to match it to the tax expense according to our accounting principles, because we'll stick to accounting principles. Are you getting the point? If there is no DTA or DTL already created in our books, what will happen according to the principles? If we believe that we should pay tax, but tax authorities demand less amount from us. If tax authorities demand less amount from us, we create a deferred tax liability. We believe that we should not pay tax, but tax authorities charge on us more tax today. If they charge on us more tax today, we create a deferred tax asset today, believing that this will be reversing in future. Now, when we already have these balances in our books, we do not create DTA or DTL. There are reversal of DTA or DTL as well. There is reversal of DTA or DTL already created. Got the point? Hello?
Yes, sir.
So this is a case of reversal of deferred tax liabilities. Is the reason it is seeming opposite. In substance, it looks like a asset because we are saying that we'll be paying less tax, but tax authorities are demanding higher tax from us. But tax authorities demanding higher tax from us. Normally, we create a deferred tax asset. But in this case, what is happening? If they are demanding higher tax from us, we were already prepared for this higher tax by creating a deferred tax liability in our books. So when they are demanding higher tax from us, we are ready for it. And so we use this deferred tax liability balance already created and we are reversing it. Hope I should conclude it now instead of repeating more. Hope it has gone through your head in exactly in the same manner as I have said. If there is any doubt, please ask, because this has a direct relationship with your IAS 12 income taxes. And if this is not clear, this will bother you there as well. So please confirm. If still there is doubt, I can repeat. Look at the substance, like look at it as a layman's point of view, that you are including a depreciation expense, you included an amortization expense because you believe that there is a fair valuation exercise. But tax authorities do not believe in these fair valuations or revaluations. They say that no, for us it is cost only. When you included it as an expense, you reduced your profit. When you reduced your profit, you calculated a lower tax on it. But tax authorities have demanded a higher tax from you because they do not believe in it. This is a temporary difference. When you calculated lesser tax, if you calculate lesser tax, you will show that lesser tax as your expense. See, this is your calculation. That according to me, tax expense should be reduced by this amount. According to me, tax expense should be reduced by 1,000. Should be reduced by 600. According to me, the tax expense should be 35,360 only. This is my accounting principle. What they demand is a separate story. What they demanded is 37,000. Current tax. Current tax 37,000. Tax expense according to accounting principles 35360. What about this difference? $1,640 will show as deferred tax. Deferred tax. These two will be the amounts presented in the income statement. This will be minus 1640. Minus 1640 means what? Credited to P&L. Am I right? And how this got credited to P&L? When we debited deferred tax liability balance. So the entry we passed is deferred tax liability debit 1640 credit profit and loss account 1640. So this is how it got credited to P&L. So your tax expense reduced by 1640, but we were adamant that we will follow accounting principles. So we'll show an expense of only 35360 into books. I hope this cannot get better than this. So it seems like a deferred tax asset, but it's actually a reversal of deferred tax liability balance. Clear now, Hima, Sapna?
yes sir, one question. ये जो 40 वाला डेफर टैक्स है इन्वेंट्रीज का, ये नेट एसेट्स में नहीं इंक्लूड करेंगे हम?
एसेट्स में इसलिए नहीं इंक्लूड करेंगे क्योंकि बीटा ने नहीं बेचा है. बीटा ने नहीं बेचा है ना, अल्फा ने बेचा है.
ठीक है, गॉट इट.
तो अगर हम वर्किंग नोट नंबर 5 बनाते ग्रुप रिटेन अर्निंग्स का, उसमें इंक्लूड करते हैं एनालाइज्ड प्रॉफिट. उसकी जरूरत नहीं है because we are preparing an income statement, so we are not preparing a balance sheet. If we would have prepared balance sheet, we would have required group retained earnings. In that group retained earnings, we would have taken this adjustment.
Got it.
Got it? I think this entry has made it more clear.
Yes, yes.
Because with that silence, though there is a lot of silence in these sessions, but this silence I could sense that is still not clear. Let's get back to where we were. So cost of sales figure will equal to now working note number 5. 425 230 There's one adjustment left in this, that is 425280 425280 minus intragroup transaction. So we need to remove 30,000 from both sides. 425280 minus 30,000. Intragroup transaction we need to remove from both the sides. The purpose is doing it here so that we can match it. 30,000 removed from revenue, 30,000 removed from cost of sales. This has taken into account analyzed profit already, so we do not need to do anything separately. 645 minus 395280 is the gross profit. We'll use all the line items which are there as part of the balance sheet. Then there is distribution cost. This is free marks, 40,000 plus 25,000. Distribution cost, 45,000 plus 40,000 plus 25,000. 65,000. Then there is administrative expenses. Administrative expenses, we made some adjustments. So this included capitalized cost of intangible asset, which we removed from it, and we did a working for it. Administrative expenses amount to be included as part of the income statement. I've already mentioned it as 75,400. Working note number 7. Working note number 7, 75,400. You can pick it from there. Next comes investment income. Investment income also, there was a change that we removed the dividend received, the interest received, and this was in note number 10. Investment income, working note number 10. Next is finance cost, 35,000 plus 20,000. If you remember, I said that there is an interest income on one side and there is an interest expense on another side. So this is finance cost, means this is an expense. And the finance cost included by beta 20,000 is which expense? In the investment income in working note number 10, we removed interest received from beta. This we have removed. But what about the interest expense? What about interest expense recorded by other party? Where will remove it? We'll remove it from finance cost. Is it fine? One side we have removed asset of one entity, liability of another, income of one, expense of another. Gets cancelled on consolidation. So this is income received from beta. When we removed it in the investment income, we should also remove the expense recorded by income of alpha, expense of beta, to be removed in the finance cost. Which turns out to be 35,000 plus 20 minus 20. 35,000 plus 20,000 minus 20,000, because we are removing this 20,000. So it is left with only 35,000 as finance cost of alpha. Share of profit from gamma, which we did in working note number investment in gamma. Share of profit of alpha. This is the amount, working note number 6. Profit before tax minus distribution costs minus administrative expenses plus investment income minus finance cost plus share of profit. This is profit before tax. Income tax expense, we just calculated 35360 Profit for the year equal to 100,300 minus 35360. Now we have to divide this profit between parent and NCI. How this is divided? Profit attributable to parent and profit attributable to NCI. This is the area which I was trying to calculate earlier so that I don't get to see a problem here. So even if you commit the same mistake which I was committing and trying to do it in the examination hall, please do not waste your time in the examination hall, because this carries only one or half marks. This doesn't carry much marks. Don't waste your time. If you even do this wrong, doesn't matter to you, because if you are doing correctly all these line items, you get line marks for every line item done correctly. So don't waste your time. I was trying to calculate this value, profit attributable to NCI, in advance, so that when I prepare the consolidated income statement, I do not face any problem. This was the mistake I was committing while doing it, so which can result in a loss of time. So you do not waste your time in the examination hall. If you also get stuck the way I did, please move forward, leave it as it is, and face it when you actually need it. If you are confused, if you are able to do it comfortably, like these calculations we were able to do comfortably, so do the ones which you are able to do comfortably. So for this, I'll write one sentence to be used in the examination hall. This is one of the exam technique. Focus on what you know, then what you do not know. So it is a good thing that I committed a mistake, so you do not repeat it. Focus on what you know. This is more important. So focus on what you know. So that means do the things which you know first. And if you do not know anything and if it confuses you and if it takes away your time, please leave it and move forward. Come back to it later, so that you gain marks for every line item done correctly. You do not waste your time, and you may lose time, which may result in not being able to attempt 5 line items, which may mean 10 marks. 5 or 10 line items, if you waste your 20 minutes or 15 minutes, you may miss the last question, which is carrying 25 marks. You could easily score 15 in it. Instead of gaining this 1 mark, lose this 1 mark, forget it, and focus on completing what you know. Got it? Now, how to divide this profit attributable to this parent? We first assign the profit to NCI, and this parent's profit always becomes the balancing figure. How do we do it? We pick the profit of beta. Most of the people commit this mistake of applying the percentage on this amount. They directly apply percentage on 64,940. What will it result into? If you, to give a profit to NCI, if someone applies the percentage directly 25% of 64,940, what is the mistake committed? Many of the people commit this mistake of applying the percentage on consolidated profit for the year. This is a consolidated profit for the year, means this profit includes profit of parent plus NCI, parent plus beta, sorry, alpha plus beta. Now in beta, NCI has a share. NCI doesn't have a share in the parent. By applying percentage to 64940, we are committing a blunder by giving NCI a share in parents' profits as well. By giving a share in parents' profit as well, if I apply directly percentage to this 64940, do not commit this mistake. So what we do, we always pick the profit from beta's balance. What is beta's balance? Profit for the year is 24,000. But this is without deferred tax adjustments. This profit is without deferred tax adjustments. How much is deferred tax adjustments? This deferred tax adjustment is in Alpha's books. Do not commit this mistake again of, when I say deferred tax adjustment, do not include all. These two deferred tax adjustments are in the books of beta. These two are in the books of beta. This is in the books of alpha. So how much profit to be assigned? How much profit to be assigned for the current year to NCI? And what other adjustments are not done in this profit? These two adjustments, beta, this is an adjustment belonging to alpha, and alpha. That means these two adjustments of depreciation for plant and brand and these two adjustments of income tax expense has not touched this profit for the year taken directly from beta's income statement. Beta's income statement shows that profit for the year, beta's profit for the year is equal to 24,000. But this is without these adjustments. Which all adjustments? These two and income tax expense adjustments. This has also not happened in the amount of 24. So the mistake which I was trying to commit is sorted here. So the profit attributable to NCI, the total profit is 24,000. In which minus 5,000 for depreciation, minus 5,000 for amortization, minus 1,000 for what will be the impact of income tax? Earnings according to you, 24,000 minus 5. According to you, the earnings are 16,000. But because of this, there is a reversal of deferred tax liability. See, in the income tax expense, this has taken into account. I'm reducing the income tax expense. Remember, here I'm reducing it from the income tax expense. Here I'm reducing it directly from the earnings. So what will be the impact on the earnings? Of this adjustment, 1,600. What is the impact? Please think through it. It is opposite of that these earnings have not reduced these expenses. Not reduce these expenses means they increase my earnings or they reduce my earnings. if there is a deferred tax adjustment, we believe that it should reduce our earnings. So they increase our earnings or reduce our earnings? This deferred tax adjustment. How much is the deferred tax on this income tax expense for this is 12,000. Income tax expense 12,000. Deferred tax adjustment, that is 1600. So tax expense should have been 12,000 minus 1600. So profit before tax is equal to 36,000. Tax expense for the year 10,400. Profit after tax from this less depreciation of plant and machinery is equal to 25,600 minus 5,000 minus 3,000 is the adjusted profit for the year. So this is an alternative. In the same manner in which I explained the deduction of income tax here, income tax expense, that our tax expense is 37,000, 1,600 removed from it, our tax expense is 35,360. If I apply the same logic for knowing the tax adjustment to be done in the profit for the year belonging to NCI, the income tax expense is 12,000. Deferred tax adjustment, like we reduced it from the total tax expense of consolidated tax expense, we reduced 1,600. There we reduced it from the total tax expense. Here we are reducing it from the, because the total tax expense was because of beta. So beta's tax expense is 12,000. They reduced it from total 25,000 plus 12,000, 37,000. 1,600 removed in the consolidated income statement. If I try to remove the same from to know the beta's earnings, if I remove directly from 12,000 beta's earnings, deferred tax adjustment, we get a tax expense of that. According to me, the tax expense should only be 10,400. This should be the tax expense. The profit before tax is given to us as 36,000. Now, according to us, the tax expense should be 10,400. So profit before tax is 25,600. But this is without the adjustment of depreciation for plant and brand. So adjusted profit for the year turns out to be 17,600, which alternatively we can do it directly from here. That beta's profit for the year is given to us as 24,000. Beta's profit for the year is given to us as 24,000. In this, depreciation and amortization have not been charged. So earnings are 16,000. So our earnings should increase because of reversal of deferred tax liability. So this results in a credit to P&L account, and this reversal of deferred tax liability results in adjusted profit for the year of beta to be equivalent to 16,000 plus 1,000 plus 600, 17,600. So when I've got to know that the profit of beta is 17,600, how much belongs to parent and how much belongs to NCI? 25% of it, 17,600. 25% of 17,600 belongs to NCI, and 75% of it of 17,600 belongs to the parent, though we don't need this information. So we simply take this as the figure and the parent's figure becomes the balancing figure. So we'll pick this 4,400. Profit attributable to NCI is 4,400, and this becomes the balancing figure because we know the total profit. We know the total profit is equal to 64940. So the balancing figure turns out to be 64940 minus 4,400, 60,540. So this is how we'll do appropriation of profit. Hope this is very clear. And with this, we come to the end of this question. And the mistake I was committing there, or while I was trying to know, the income statement here, if you remember, I was trying to know how much profit belongs to NCI after trying to make those adjustments. Now, if you notice here, the profit for the year between the beginning of the year to the end of the year is 10,000. Out of this 10,000, NCI has a share of 2,500. That was without adjustment of 1,600 in the total profit, which by chance matched here, which created confusion. That 2,500 minus 1,600 turned out to be 900, which is the profit for the, I thought that is the profit for the year one. So when I tried to reduce it from 5,300 minus 900, it turned out to be the profit for the year as 4,400. So 5,300 is the total profit. 900 is the, I thought that is profit for the previous year, which created confusion. So it's good that I left it there. I'm purposely coming back to the point because that's the area which can create confusion in your mind when you're again going through this. So I thought that once it is settled, I should come back to it. That what is the mistake I committed? I committed a mistake in which by chance that the figure turned out to be equivalent to 900, which made me believe that 4,400 plus 900 is equivalent to 5,300. So which was a mistake trying to do it directly from these figures. So the reason is actually this, the reversal of. Hope this is clear. Hello. Nothing can get better than this. I can tell you, anywhere on earth, none of the tutors around the globe will explain it to this level. So this is all for the day. Thank you for your time. If you have any queries, please ask.